Right, hello and welcome to Camel Finance. I'm your boy Camel, and this is just going to build on yesterday. We were talking about the whole CPI thing. We were talking about what we expected to see from the market. It's going to spend some time going through the charts and pointing at things and saying whether they are in line with expectations or out of line with expectations. First of all, shout out to Jay for bringing this to my attention. Michael Burry has allegedly closed his $1.6 billion short. Remember, that was only notional value. That was notional value. It's significantly less than 1.6 billion. And he's booked a loss of 40%. So this is not me saying haha or look how bad this guy is. It's just simply, if we cast our minds back to when this short was opened, Twitter melted down, okay? Bears came out in full force. Everyone was saying, oh, the king of the shorts, Michael Burry has shorted the market, and that means we're definitely going to Goblin Town and all of this and blah, blah, blah. And I said, look, let's just be calm. Let's just take it one day at a time. And it just goes to show, right, that you can live in a fear state and you can be bearish all you like, or you can learn a bit of TA and draw a trend line and see what the chart tells you to do. So moving on, here is the melt up chart. This has been the staple of the channel, and I'm not even going to go into it anymore. I'm just going to say, I think possibly we are finally entering this portion of the rally. It's been a long time coming. Okay, it's been a great ride on the way up. We've been in, we've been out, we've been patient, we've been sat on the sides, we're back in again, and hopefully this is what's coming. Now, most of this is based on the expectation that CPI was going to continue to come down. And so far, that's what we're seeing, right? We got a cold print as of yesterday, so there's the numbers, happy days. And I said this, look, the inflation to deflation pendulum is swinging, okay? It's swinging, it's in motion, we seem to be on the way to deflation. And the next CPI print is likely a lot lower because of this. In fact, let me hop into this diagram for you. I've showed you this a bunch of times. Highly inflationary environment on one side towards deflation on the other. We are definitely not here anymore. This was the Goldilocks zone where the market will rally because everything looks pretty sweet. Inflation is coming down. The rate hiking cycle, we can see the light at the end of the tunnel for. So things don't look so bad, right? But I think we're now well into this portion of the curve. And the reason I say this is things like oil, corn, and cotton have been screaming this for a while. If we hop into the chart, this is corn right here, okay? Does this look like an inflationary environment to you? Does this look like corn is suffering from inflation? I don't think so. Personally, the cotton chart looks exactly the same. And oil, if you've been following the channel, we have been short oil for a while. And the reason being is I believe that inflation to deflation pendulum had been set in motion. Oil, unless it breaks out, is looking more deflationary than inflationary to me. And I would not at all be surprised if what we see is this continue to just get sold off into, right? I wouldn't be surprised if this happens. And if this happens, then how is CPI going to remain sticky? That's my question. That's my base case. Now, I also want to make it clear, because when I say things like this, or when I'm talking about a change in potential shape to the Bitcoin cycle, I think I'm clear. I think I'm very clear in that the only thing I know is I don't know. I'm not making any predictions. I have my base cases and expectations. This is one of them, that we are swinging from highly inflationary to deflationary. And that's all it is. It's a base case. It's an expectation. I know nothing. Nothing is for sure. It's a market. Nobody knows anything. There are a bunch of people that would like to tell you they know something, but believe me, nobody knows what's going to happen. So please don't confuse me saying this is my base case with this will happen, okay? And the same for the Bitcoin change in shape. I say this all the time. If we continue to go up, I expect us to top early and then spend a longer bear market than Bitcoin is used to. And conversely, if we start to base pretty soon and then have a little halving pump, dip after the halving, and then start to go parabolic, I will accept that as the base case, that we're doing a standard 4-year cycle shape. I have no idea. Okay, so if you're one of the few people that keeps commenting to say, haha, you're dumb for thinking or for saying that, the cycle's going to change, or good luck with your pre-halving top. I mean, it's a base case, it's an idea, and again, I'm open to anything, okay? And that includes this. But for now, like I said, going back to the point is oil, corn, and cotton looking deflationary. There's a bunch of other commodities that are too. But conversely, there's also some commodities that are looking like inflation could be sticky. So this is still a one day at a time. But for now, this pendulum does indeed seem to be swinging towards deflationary environment. And we're seeing that, of course, manifested in the lower CPI prints. So I expect to continue to see CPI come down. All the while CPI is coming down, all-time highs are loading. And that has been, again, another one of these base cases. I didn't know this would happen for sure. This was just the base case. And it seems to be now that we're really not that far away, are we? If I grab a little measuring tool, we're a mere 6% from all-time highs. Now, do we go all the way up here? in this huge blow off top move, or do we just about maybe breach the all-time highs by a few points and then roll over, something like this? I don't know. Again, one day at a time as always, but for now, things look constructive and I'm happy with the way things are going. Once again, the bears and the macro LARPs have egg on face. Remember, bears sound smart, but bulls make money. If you live in a fear state, you're not going to do well in life. Just be positive. Things are never as bad as they seem. As the CPI has come down, the Fed has even more, and I say this lightly or sarcastically, credibility in sticking to the pause. And we could see this because this has been repriced from about 85% to around 95% overnight since we got that lower CPI print, which means with most certainty, we are going to see another pause in December's meeting. So again, happy days there as well, because we know that the pause sets up that rally to all-time highs. Again, all the stars seem to be aligned here quite nicely, don't they? At the same time, as we've got this pause essentially confirmed, we're also seeing rejection resistance for the credit spreads. Again, does not look anything like a financially stressed situation just yet. A breakout of here, and we will have the signal that things are starting to break down, but that has not happened yet, as you can see. I also tweeted this at about 3 o'clock UK time yesterday. I said the Russell 2K is getting added here, and I'll show you that in just a minute. So with all that said, let's take some time to have a look at the charts. Let's make sure we're fully aware of everything that's going on. We've been expecting the dollar to roll over, haven't we? And we got that big red candle down yesterday. So dollar index rolling over. Euro dollar, as you can see, continues to be bid, continues to pressure the dollar basket. Why? Of course, because it makes up 57% of the DXY basket. The 10-year yield, the chart of truth. Take a look at this big red candle. Okay, again, we were kind of expecting this, weren't we? Now we've got this trend line. Are we going to see breakdown, retest, resumption lower? That would be my base case again. Why? Because the Fed is done hiking, right? The Fed is done hiking and the markets are forward looking. So we're going to start to price in that the next move for the Fed eventually is cuts. The stock market, I mean, look at that, right? Breakout, retest, resumption higher, long, strong, continue to push. What else is there to say? The NASDAQ, even more bullish, okay? Very, very close, within a few points of taking out the July high. And of course, get above that, and that opens up the run to all-time highs, doesn't it? Again, we're talking just a few percentage, maybe 6%-ish, maybe 7% from the all-time highs at the moment. So I expect to see perhaps some pullbacks along the way, although pretty shallow pullbacks. I think we're in blast-off mode now, about to run the all-time high and complete this blow-off top move. The Dow Jones as well, take a look at that, okay? Right back above this big blue zone. So again, breakout, retest, resumption, moving higher. Here's the Russell 2K. So again, I was talking about this, I said, play patient, play patient, play patient, and now it's broken out. I put out that tweet. You can go and cross-reference the time, and here's the position with a stop loss at 17.05, more or less following this red squiggle. So we'll see what happens, right? Long and strong, continue to push. That's now me back to full exposure. I don't want any more positions. See the VIX getting crushed, isn't it? Getting crushed. So again, another thing we've been expecting is to see the VIX get crushed, and that gives the space for the stock market to run the all-time highs. So far, everything looks spot on, doesn't it? Everything looks absolutely perfect to see the all-time highs run. Here's gold. Gold seems to have found a swing low. So are we going to do this? Okay, for me, I've decided what I'm going to do, and I'm going to play the all-time high break, right? And a lot of people are like, why would you buy at all-time highs? Why would you buy at all-time highs? Well, because there's no way that gold goes on a big bull market run like this without getting through the all-time high level, right? So that's my strategy. I'm not going to waste my time getting in here and trying to make a few points or whatever. There's an absolutely valid trade for sure to play the swing low with a stop below here and target however high it goes, right? But for me personally, given that the stock market is setting up for this big risk on moment, given that the stock market is going to run to all-time highs and crypto, I think my money is better played in Bitcoin and the stock market like it is currently. And if we do get an all-time high break, then I'll just jump in here and we should be able to make a pretty quick 50% on this gold move. For now though, I am still cautious because like I said, if we are going to get this big risk on moment for the stock market and crypto, then is this thing going to end up becoming a failed cycle? Are we going to roll over? I don't know. That's to be determined. Silver not looking super strong, right? I mean, a couple of nice big green candles here, but it needs to take out these highs before we can even think about attacking the red. Again, though, similarly to gold, if gold breaks the all-time high, I'll buy the all-time high break. And if silver can break this downward sloping red resistance line, which goes all the way back to the $50 level back here, then I'll be interested in taking that long for sure. But I do think, why silver and gold now? That's my question to you. And yeah, there's an argument, well, the dollar's coming off and yields are coming down. Maybe that is enough, right? But for me, why the metals now? I'm not convinced personally. And the miners still kind of looking weak for now at least. Now things can change and they can change quickly, but they haven't changed yet. Here's a junior miners. Again, doesn't scream huge precious metals bull market to me. If you haven't seen yesterday's video, go and check that out, because that again kind of builds into my own narrative for why it's not really the time for gold at this current moment in time. I think Bitcoin has its time to shine, and then the exit to gold potentially comes in the middle of next year sometime perhaps. So anyway, that's that. Still short and strong oil, as I kind of alluded to earlier. And finally, last but of course not least, saving the best till last, we've got Bitcoin, right? So again, I was talking about this, wasn't I, over and over and over again, that we'd probably get a half cycle low shakeout. And here we go, 29 was yesterday. Today is a perfect 30-day. Now, it doesn't have to form on day 30. There's a bit of wiggle room either side, as there always is. But I think that's probably what we just completed, a half cycle low shakeout. And now we're probably going to be looking to resume to the upside. I've had plenty of people ask me, is this a good time to buy Bitcoin? And look, I can't tell you what to do, okay? I also don't know what's going to happen. From a cycle perspective, looking at this as a cycle, we can say, yeah, we've moved up, half cycle low shakeout makes sense. Now, in the best case scenario, we could expect some continuation of the upside before that decline into that next 60-day cycle low. But the thing is it better to buy the half cycle low or this cycle low? Now, there's two scenarios. We could move up here, form this daily cycle low much higher up than the current half cycle, or we could form it considerably below, okay? There's literally no way of knowing what level this is going to occur at. I will say this though, there's much higher probability of a winning trade coming out of this cycle low than the half cycle. There's nothing to say this half cycle low doesn't bounce here, right? And then roll over and start trending down into that next 60-day cycle low. That would still be a very bullish structure. There would still be nothing wrong with this from a charting perspective. But you can see that buying here might only yield a few points essentially before we roll over into that cycle low. Similarly, we may also come tearing out of here before we drop down into that cycle low much higher up. But again, that right there would be a much higher probability setup than this one would. As always, if you insist on buying a cycle low or a half cycle low, then the way to do it is to draw a trend line, wait for a reversal and a break of that trend line, and get long there and put the stop below the half cycle low. But again, be open to taking profit soon if you're going to do that, because there's nothing to say that this this 60-day cycle low, which is also the weekly cycle low, remember, may well be a violent shakeout. Now, it might not. It might be as shallow as 10 or 15%, but it could be as severe as 40%. Nothing would surprise me. This is Bitcoin, remember. It does Bitcoin things. For me personally, as you can see, I've got both my positions. Long and strong continue to push. Wherever this 60-day cycle low shows up, I'll be adding another position, okay? I'll be adding another position. I'll be moving stop losses up, because if we really are going to do this Bitcoin thing I've been talking about, right? Let me put this on log. If we really are about to do this, okay, then whether we get one of these shallow pullbacks into the next 60-day cycle low or a much deeper one, I want to be getting ready to see this massive blow off top move develop for Bitcoin. So the more positions I can add and stack, the more money we're going to make. And of course, going back to this chart right here, once we get to this next 60-day cycle low, I can use the profit from these first two trades to finance the risk on the third, right? I don't need to take any more risk. I don't need to risk taking out more than the standard 1 to 2% of my account, because I've got the profit from the first two trades that will finance the risk for the second. So long as I move the stops up so that if one is stopped, they're all stopped, I'm guaranteed to walk away with profit here, right? So anyway, long and strong continue to push, one day at a time as always, and I'll continue to update you as I continue to play these cycles back to back as always. XRP right into these magical trend lines, right? You can see that perfect touch there. Some sort of ETF manipulation move. Who cares, right? Long and strong, continue to push. And the crypto-related equities, I would think as Bitcoin continues to come out of its half cycle low, then we're going to continue to see these move up. And that seems to be what's happening. Seems to be the same for MicroStrategy, Riot, and I bet Marathon is the same. Yeah, so hopefully these things can get going pretty soon. I think it would be nice if we can get a good pump up ready and ahead of that 60-day cycle low, because as we start to form that 60-day cycle low for Bitcoin, these are all probably going to suffer. So if they continue to chop around here, right, and then that 60-day cycle low becomes due, it's kind of reasonable to expect something like that. So it would be nice if we can get some space underneath these trades. We can get underneath some squeezes ahead of those 60-day cycle low for Bitcoin. But of course, as ever, one day at a time. Hopefully you can see, right, everything looks pretty good, right? Everything looks pretty good. The setup is there to see much higher numbers. The stock market looks really strong. Bitcoin continues to look really strong. And despite a lot of people getting worried about this, remember, the half cycle low just exists to shake people out before we complete the next move up. So I doubt this time is different. Overall, the base case across the board still seems to be in play. And as ever in trading, it's right until it's wrong. I'm open to everything, but for now, why should I move off of my base case? My base case seems to be coming to fruition, so I will stand with it until the market tells me otherwise. I hope you're doing well in life. I hope you're enjoying the content. And until next time, take care from me. All the best. Cheers. Bye.